Okay, so for today's video, I'm going to be going over the highest probability reversals in the market, how you can implement this into your day-to-day trading and into your current models to improve your win rate. So in my opinion, understanding where the highest probability reversals are is a very important concept to learn. And today I'm going to be teaching it with all the concepts that I have currently been teaching. So this will be correlated to all the videos in this current playlist. So yeah, let's just get straight into this. So first thing that I look for is the 4 hour time frame or the hourly time frame. The highest probability is the 4 hour time frame for how I trade, and from what I've back tested, it has the highest probability for reversals and the fastest reactions. So the first thing that I actually look for is an intermediate term low or high. So if you don't know what an intermediate term low or high is, then I'll just go through it now. So it is basically a low or a high that is inside of a fair value gap. So using those, they are very, very strong liquidity sweeps. And I've noticed on the 4 hour time frame or the hourly time frame, we tend to have the biggest and fastest reactions off 4 hour intermediate term lows or highs. So that is the time frame that I look for my intermediate term low or highs, and I use these for targets and reversal points in the market. Okay, so the next concept, the next thing that I look for is a standard deviation projection, and I look for the 1 to 1.5, which is this zone right here, which has the highest probability for reversal. So if my 4 hour intermediate term low or high aligns with 1 to 1.5 of my standard deviation projection, then I just know that there's a massive possibility for the intermediate term low or high to act as a reversal. So they are mainly always my targets or bias for reversal points in the market. So the last thing I look for with my confluences is a key time for reversal. So key times are going to be, these are going to be your key times. So we're looking for a potential reversal at 8:30 to then catch a continuation at 9:30, or we're looking for a 9:30 reversal or the 10 a.m. reversal. And now having this out the way, I'm just going to keep this on the screen for now and mark these when I see them. So what I'm going to be looking for is my 4 hour intermediate term low or high. In this instance, we're currently in a downtrend. So if I'm looking for a reversal from this downtrend, I'm going to be looking for an intermediate term low. Now we are on the 4 hour, so I'm marking up my fair value gap here. And as you can see, we have this low right here aligning perfectly with this fair value gap. So this is going to be my intermediate term low. Now currently, this is strong enough for a reversal on its own. As you can see, we've been in a downtrend, creating lower lows, not failing to sweep out highs. We don't have many manipulation legs inside this trend at the moment, so I'm going to drop down to a lower time frame. So right here on the hourly, what I've noticed is we have a downtrend, and we have a slight manipulation out of this downtrend to then push higher to continue the trend. So I'm going to be measuring the high to the low of this manipulation leg, and looking what aligns inside 1 to 1.5 of my standard deviation projection is my intermediate term low. As you can see, price has taken out this low, and we start to get a move higher, but we failed to really displace higher. Now this is because we didn't hit this at a key time. We hit this at 3 p.m. on a Wednesday, so that is not a key time at all. Now if you look right here, after sweeping out this low, we stayed inside the fair value gap, and we left behind another intermediate term low inside 1 to 1.5. So now this is going to be our next highest probability reversal zone. And when do we get it? Right here at 8 a.m. I'm sure this was 8:30 a.m. roughly. So as you can see, we got our reaction off at 8:30 a.m. and we could have caught our 9:30 continuation higher right here. So that's how I used this the other day. Once price took out this low at 8:30, then we inversed this fair value gap right here. I knew that the bias for the day was going to be bullish. All I needed was an open low, and at 9:30 we got an open low inside this bullish fair value gap, and then I could catch the continuation higher, which is exactly what I did, and I targeted this hourly unfilled fair value gap right here. So that is how I paired up the reversal point in the market with other concepts and caught the continuation of the reversal for a winning trade. So after that demonstration, as you can see, we have used the 4 hour and the hourly to catch our reversal point. We used the intermediate term low, we used standard deviation, and we used our key time. Now range equilibrium is not 100% needed every time. However, it can give you more confidence and more conviction on taking the trade if we have range equilibrium. But for now, I'm just going to remove this. So I'm going to be looking for another demonstration, and this is what I looked for on Friday. Unfortunately, I didn't find any entry models on Friday. The price action was a bit bad in my opinion, but I had this key zone right here. So what does this zone align with? Our manipulation leg, downtrend, manipulation higher, fill an imbalance, and then continue the trend lower. So we're measuring the high to the low of this. We have our 4-hour intermediate term low aligning with standard deviation 1 to 1.5. So right there is our reversal point in the market. Now ES actually took this out, and NQ failed to do so. So we created a bullish SMT at these lows. So now we have a bullish SMT on our intermediate term low inside a 4-hour fair value gap, also aligning with 1 to 1.5 of the standard deviation projection. So that is an A+ reversal zone in the market. Now the only thing that I didn't like about trading this, and this is why I didn't take a trade, was the fact that we created an hourly fair value gap right here, and it goes against my rules to trade through an hourly fair value gap. So I didn't take this trade on that day. However, as you can see, we had a very strong reversal from this point. Okay, so now I'm looking at this range right here. As you can see, it's a bit of a choppy range at the moment. Here's our swing high, and here's our swing low. Now what does our swing low align with in this leg? It aligns with a bullish fair value gap. So now I'm going to mark up this bullish fair value gap. What happens once we take out this low? Reversal higher, taking out liquidity inside this leg here. Now this was at a key time, as you can see, 10 AM, we caught the reversal higher, and this was another perfect reversal zone. What do we have right here? 10 AM again, opened lower, taken out this low, and then we got our distribution higher to take out this swing high. So just using the 4-hour intermediate term low here, as you can see, we have caught a very good reversal twice in the market using this. Dropping down to the hourly time frame, I'm just going to see if there was any standard deviation projections. So we do have a current downtrend, and we have our manipulation higher to continue the downtrend. So I'm going to be measuring the high to the low of this, and as you can see, the standard deviation projection just misses this low. However, we can still use the standard deviation zone for the reversal. And what happens once it gets tapped? Let me just mark up 1 to 1.5. So there's 1. So I've marked up 1 to 1.5 of this zone. As soon as price tapped into this zone and swept this low, that's where the key reaction came from. So noticing how we've used standard deviation again, and price has come lower, we've tapped back into this zone and we've swept the next intermediate term low, which is this one right here, and then we have our reaction higher. Okay, so that is going to be the end of the video for highest probability reversals. This was quite a simple one in my opinion. You can screenshot this if you want. These are the key things that I look for when taking reversals in the market. I did forget to add SMTs at the beginning of the video, however I'm going to add it now. I don't know how I forgot this. Is one of the key things that I actually use every day. So I've taught all these concepts on their own in different videos in this playlist, so you should, having watched those, you should be able to understand all of these. Now using these on the key time frames, we're using them at key times for reversals, works extremely well. Now I use these every single day. If you check some of my trade recaps, then you can see how I've used the 4-hour intermediate term lows or highs for reversals a lot of the time. But yeah, so that's going to be everything for today's video.